Welcome back, traders, to another episode of Investeen hosted by me, Rishi. And on this episode, we're going to be diving into the fifth letter of CANSLIM, which is L, and that stands for leader or laggard. And so the entire purpose of today's video is to teach you how to find the strongest stocks in those strong sectors and industries that make the biggest moves first, and also show the least resistance during pullbacks. And these are the qualities of leading stocks that we're looking for. As I've said in previous videos, new innovative leaders who are changing the industry, not afraid to take risks, and are bringing new products and services to the market are so important to look out for. Paired with earnings and sales growth that are in the upper double digits or even triple digits in the past quarters, these stocks are most likely leading their industry or even their sectors. Speaking of groups, you should really be looking for the best 2 or 3 stocks in an industry that has been showing collective growth and strength over the last couple months. In the series where I taught you how to conduct a top-down investment analysis, we mentioned that so much of a stock's move is dependent on the performance of its peers and the industry. Both criteria have to be met: big price moves and strong industry performance. And don't be disincentivized by higher stock prices either. A stock reaching all-time highs but backed by strong fundamentals and huge growth potential is likely to keep rising. Stocks in the same industry who don't bring any innovation and instead similar products of lower quality should not be invested in for being cheaper. These are called sympathy plays and involve laggard stocks indicated in leader versus laggard in CANSLIM. William O'Neill literally said it the best. If you're down 8% or more on one of these laggard stocks, get out now before they hurt you more and sail towards that downside. And all of these concepts are so interconnected and intertwined. Industry leaders in bull markets who have increased sales and earnings growth from innovation are more likely to be bought and sold by institutions who will ramp up the price of a stock through increased demand and lower supply. That sentence itself covered all the letters of CANSLIM. Now, as we had said that volume is the best way to measure supply and demand, relative price strength is the best way to find stronger stocks that should be held in the long term. And this is a purely technical indicator comparing the price performance over 52 weeks of a stock against the rest of the stocks in the market. And the scale runs from 1 to 99, and we can see this being graphed on this arc chart where we can see the RS rating being 96. And this is the relative price strength line, and it can be found in Market Surge. So a rating of 99 means that the given stock has outperformed 99% of other stocks in the market in terms of price. And the biggest market winners that William O'Neill had analyzed from the 50s going into the 21st century had a relative price strength of 87 on average. Essentially, we should be looking for stocks with an RS rating of 90 or above. The fluctuations of this RS line can be seen by plotting it on the chart, and through this we can see it in relation to time. Moving on, we want to be looking for the stocks who decrease the least during bull market corrections. These are the ones that are showing their strength and are backed up by some of the most innovative reasoning and strong fundamentals. We mainly call stocks like these leaders because they're the first to bounce back from corrections and take on new highs. They lead the pack. Obviously, we must find the right entry points through technical analysis to make sure that we can have the maximum gains. William O'Neill highlights throughout the book that buying at pivot points outside a first or second base is so important. A pivot point is where a stock sentiment reverses from bearish to bullish or vice versa. And buying stocks when they're extended over 5 to 10% above that pivot point could lead to losses if the stock begins to immediately pull back in price. And a great way to check if a stock is extended would be through using Bollinger Bands. So if we load up Palantir Technologies right here, I just want to show you guys an example of a stock pulling back when it's far too extended. So let me just turn on the Bollinger Bands. And so we can see that the middle line is a 10 SMA, and then the upper and lower bounds are both 2 standard deviations away from that. And so many prominent investors do use this to get a rough signal of possible extension. And when the price crossed over this band right over here, it may have been time for a pullback, which is exactly what happened as the stock had come down by $3. And it's not too big of a deal, but I just wanted to clarify the idea of being extended. And so there's so many other strategies that others may be using to measure how extended a stock may be. But again, this is just one that I do prefer as it does not create much clutter and it's really easy to visualize on my chart. Now, as always, we have to end off with applications. You won't really understand these ideas if you don't see them in play with stocks today. Now, let's look at a fan favorite, which is Nvidia. And this has been a really top-notch example of a market leader. First off, these fundamentals are literally insane. And the earnings growth is in the triple digits, and not just the low triple digits, this is like the mid triple digits. The earnings per share is literally ripping upwards. And sales growth can back this up, which is super strong and accelerating. Return on equity is 99%, which is almost 6 times more than what the minimum for CANSLIM is at 17%. And then cash flow is almost 1,000% larger than the annual EPS. And I've really not seen fundamentals like these yet. Now, moving on to what we learned today, the RS rating here is a 98, meaning that Nvidia has outperformed 98% of other stocks in the market in terms of price. And if we look into more specific details for its industry and sector, it resides in the top 5% of industries right now and is performing at the very top for EPS rating and RS rating. We already know that Nvidia is outperforming with superior sales growth, profit margins, and return on equity ratios, showing that it's at the top for SMR rating in the industry. And with the composite rating being a 99, Nvidia's overall strength puts it at the top 1% of all stocks. And that's not all. If we look into the technicals on the daily chart, we can see that Nvidia seems to have some selling pressure over the last couple of days in this middle July time period. But it has begun testing this really strong support level over here, which has been touched by price at least 6 to 7 times in 3 instances, and we may be seeing a reversal to the upside coming soon. Last example before I end this off, I found this stock on one of my screens and it really caught my eye, and I showed it to you guys a couple minutes ago. So ArcRock sells natural gas compression services and equipment based in Houston, and it started picking itself up after late 2022, and we can see this nice uptrend happening ever since. And so we can also see that they have really great fundamentals with accelerating triple-digit growth in the last quarters. And we can also see the technicals are doing really well. If we go to a daily chart, we can see that it's hitting some nice highs out of this cup pattern. And if we go into some specifics, we can see that ArcRock is in a top 15% industry, 29 out of 197. And it is also performing in the very top of its industry, being the best in various categories that we also looked at for Nvidia. And so overall, this was a really great stock to look at. And I'm excited to see what happens with this one in the future. And that pretty much wraps it all up. Thank you so much for watching this video. In the next one, we're going to be covering the 6th letter of CANSLIM, which is I, and that stands for institutional sponsorship. If you enjoyed this video, please drop a like down below and consider subscribing. See you in the next one.